We recently published EY's Power Transactions and Trends and Capital Conference Barometer Thought Leadership documents, which I believe you'll find insightful. Let me take you through some of the key highlights. The EY Capital Conference Barometer revealed that energy executives are confident of global growth, and about 60% of global executives expect to pursue transaction in the next 12 months. This is continued positive news for the M&A deal market. That being said, the third quarter of 2018 saw M&A in the global power and utility sector drop slightly, with a total deal value of approximately $60 billion. But year to date, deal value is at an all-time high of about $240 billion in the power and utility sector. The global power and utility sector is witnessing a surge in gas utility and renewable energy deals. The strong market fundamentals for clean sources of energy throughout the globe are attracting investments. When we look at the regions, it was the Americas that again saw the most deal activity in Q3 2018. Within the Americas, almost all of the deal activity was contributed by M&A in the US, where we're seeing continued shareholder activism play a big role in driving deals, which is quite unconventional for the power and utility sector. Actions by activist investors were behind Sempra's decision to sell off its renewable assets and focus on its core regulated operations. Across Europe, regulatory uncertainty may have contributed to the sharp decline in deal value this quarter. Deal value declined by about 80%. However, renewable energy investment activities were still holding strong. Most of Europe deals this quarter were in renewables, particularly offshore wind, which attracted investment from strategic and financial investors. In the Middle Eastern countries, the transition from fossil fuel to clean energy continues. Across Africa and Middle East, the top 5 deals this quarter were in renewables. In summary, our PTT and CCB thought leadership documents provides insights into the appetite for deal making, which remains robust across global power and utilities companies, particularly as the sector continues to seek balance sheet scale and investment opportunities in clean energy and emerging technologies. We observe that deal-making intentions remain strong. There is continued confidence in the global economy. We're still at historically low interest rate environment, although it is rising. There is strong confidence around credit and access to capital, as well as historical high stock currency for deal-making. We're also seeing lots of interest from financial sponsors with enormous amount of capital and dry powder for investments. These are all great indicators for continued M&A activity. However, the risk of global economic slowdown from policy missteps, including raising interest rates too quickly or removing too much liquidity from the global capital markets. Additionally, there's always the concern of geopolitical issues and perhaps too loose regulation, which could lead to bad market behavior and loss of overall confidence.